The US dollar is strengthening against most currencies, with the US dollar index hitting an 11-month high in anticipation of a more hawkish signals from Fed officials. Recently, the US economy has been showing resilience and much stronger data than other major economies. Today, we will have a closer look at the events that may affect the market in the remaining two trading sessions of the week. As a rule, traders in the Asia-Pacific session are the first to start trading when they receive the Australian goods trade balance data. The outlook is very optimistic. If the value of the balance changes, it's unlikely to change much, which may become a reason to buy the Australian dollar. However, the Australian economy is dependent on commodity exports to China. Against the decline in China's manufacturing sector, the volume of Australian exports may plummet. In general, there is a probability that the forecast will not come true. On Thursday, markets will keep a close eye on the Bank of England meeting. The regulator's tightening cycle is likely to continue. In anticipation of the meeting, the British pound has been under pressure since the beginning of the week. The monetary authorities are confident that the inflation is stable, remaining above the target level. Therefore, the Bank of England may likely keep its interest rates high for an extended period. However, high interest rates are damaging the economy. For example, on Monday, the mortgage approvals indicator posted the lowest figure since January, which is a rather alarming signal for the economy. Thus, the interest rate is highly likely to remain unchanged on Thursday, and the British pound may continue to lose ground against the US dollar. On a Friday, investors will evaluate export-oriented economies, and this time the focus will be on Germany. The overall trade balance remains the same, but we should look at the details of the report, namely the imports and exports. Both indicators show negative figures. That's the net balance is only held stable because the decline in imports offsets the drop in exports. Notably, markets will likely perceive this news as negative, and the data may harm the euro's investment appeal. It should be said that this week investors will assess a large flow of macroeconomic data. Each day we will receive key data. On Friday, the US will release data on its labor market. However, let's start with a little less important news on Canada's job market. The situation there has been quite tense for several months, and the growth in the number of employed reached its 8-month high, which gave investors a reason to expect another rate hike by the Bank of Canada. However, the monetary authorities have refrained from resuming its tightening cycle so far. Moreover, the forecast for October is quite modest, making markets watch the US Central Bank's auctions. Like Canada, the United States is also seeing a surge in employment growth, and the last reporting period unexpectedly showed the strongest growth in 8 months. At the same time, the actual data came in 100,000 higher than forecast. The fresh data is expected to post a much more modest increase, which is consistent with the current situation in the US economy. The stable position of the US economy can provide an average increase of 200,000. If investors see such figures, they will receive a signal to buy the US dollar. At the same time, investors may also start buying the greenback if the non-manufacturing purchasing managers index remains above 50 points. and we will monitor the market reaction to the above-mentioned reports. Subscribe to the channel and follow changes in market sentiment with us. Any comments, questions and offers are welcomed. We wish you profitable trading and see you soon.